Good afternoon, investors. You are now on Kleverstock with me, Anujaria, and I will be serving you the midday roundup with the latest market updates from this morning up until now. Kicking it off with the Bursa Malaysia updates. Bursa Malaysia regained its strength to trend higher in early trade today, tracking Wall Street's performance last week despite muted global sentiment amid the holiday season. At 9:06 a.m., the FPM KLCI rose 3.28 points or 0.2% to 1,680.38 from Friday's close of 1,677.10. The index opened 0.21 of a point better at 1,677.31. The broader market was almost flat with gainers leading decliners 134 versus 133, while 302 counters were unchanged, 2,164 untraded and 58 suspended. Turnover amounted to 67.16 million shares valued at 33.36 million ringgit. Rakuten Trades in Berhad's Vice President of Equity Research Tong Pat Leng said trading on Wall Street was largely lackluster last Friday due to the holiday season. On the home front, he said the local bourse is also expected to be slightly muted today as market participants await fresh catalysts. He said we expect the trading to remain muted but well supported, with the index likely to trade within the 1,670 to 1,685 range today. Among the heavyweights, Maybank and CIMB added 4 cents each to 10 ringgit and 44 cent and 8 ringgit and 19 cent respectively, while Public Bank, Tenaga Nasional and IHH were all unchanged at 4 ringgit and 52 cents and 13 ringgit and 36 cents and 8 ringgit and 59 cents respectively. Of the most active list, TWL and Valesto were flat at 2.5 cent and 28 cent respectively. VS Industry rose half a cent to 48 cents and Farm Maniaga eased half a cent to 29.5 cent. Of the top gainers, Malayan Cement gained 10 cents to 7 ringgit and 73 cent. Hong Leong Bank increased 8 cents to 22 ringgit and 50 cent. Press Metal added 7 cents to 7 ringgit and 25 cent. And Hong Leong Financial put on 6 cents to 19 ringgit and 10 cent. As for the top losers, Alliance lost 14 cents to 20 ringgit and 20 cent. Telecom Malaysia and Hong Leong Industries gave up 6 cents each to 8 ringgit and 1 cent and 16 ringgit and 50 cents respectively. And HNL High Tech dropped 4.5 cents to 60 cents. Moving on to local currency and foreign exchange. The ringgit continued its upward momentum on Monday, opening higher for the 12th consecutive session ahead of a holiday-shortened trading week leading into the new year. At 8 a.m., the local currency surged to 4.0425 or 4.0565 against the greenback from last Friday's closing of 4.0470 or 4.0535. Now, Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzal Nizam Abdul Rashid said the market is expected to move in a narrow range today in week of the holiday-shortened week with the New Year celebration on Thursday. He said, therefore, we expect the US dollar ringgit to range around 4 ringgit and 4 cents to 4 ringgit and 5 cents today. At the opening, the ringgit was traded mostly higher against a basket of major currencies. It appreciated against Japanese yen to 2.5855 or 2.5948, strengthened vis-a-vis the euro to 4.7592 or 4.7757, and was almost flat versus the British pound at 5.4570 or 5.4759. Similarly, the local currency was firmer against its ASEAN peers. It rose against the Singapore dollar to 3.1474 or 3.1588, gained versus the Thai baht to 12.9913 or 13.0451, improved against the Indonesian rupiah to 241.3 or 242.4, and was up vis-a-vis the Philippine peso to 6.88 or 6.91. Now for some local economic news. Malaysia will see the implementation of several major developments that will have both direct and indirect effects on daily life and the country from January 1st, 2026. Now, beyond shifts in geopolitics, the economy, society and international regulations, several new policies and regulations are set to take effect next year. Among the key measures expected to be enforced is the Solid Waste and Public Cleansing Management Amendment Act 2025, which introduces stiffer penalties for minor littering offences in public areas. Any individual, including foreigners, found littering in public spaces will be fined 2,000 ringgit and required to perform 12 hours of community service within 6 months. On the same date, the Online Safety Act, which strengthens the regulations of harmful online content, will also be enforced. Social media platforms and internet messaging services with more than 8 million users in Malaysia will no longer be required to apply for operating licenses, but will remain fully subject to all provisions of Malaysian law. The move is aimed at ensuring all platform providers are held accountable for addressing illegal content, including online scams, the spread of false information, misuse of fake accounts, and crimes involving children. The government will also implement a regulatory sandbox program to assess child protection mechanism and user safety in the digital space before rolling them out fully. A sandbox refers to a regulatory testing framework commonly used in a technology and digital sectors, allowing stakeholders to trial new approaches, mechanisms, or technologies in a controlled environment before full implementation. Now, among other measures, the Transport Ministry said traffic summonses, compound rates and payment methods will be standardized between the Road Transport Department and the police. Under the new structure, a 50% reduction will be given for payments made within 1 to 15 days, 33% for payments made between 16 and 30 days, while the maximum rate will apply for payments between 31 and 60 days. For offences unpaid after 61 days, court action or blacklisting measures will be imposed. Malaysia will also see the youth age limit revised to 30 years, down from the current upper limit of 40. The amendment not only lowers the youth age threshold but also sets the age limit for leaders or office bearers of youth organisations between 18 and 30 years, with a tenure cap of 4 years. Next month will also bring good news for civil servants with the implementation of Phase 2 of the salary adjustment under the Public Service Remuneration System. This includes a 3% pay rise for top management and increases of up to 7% for professional and support staff. Still on local news updates. With no room left for land expansion, productivity in Malaysia's palm oil industry must now come from technology, automation and artificial intelligence, Malaysian Palm Oil Board said. Now, Director General Dato Dr. Ahmad Parviz Ghulam Kadir said the sector can no longer rely on business as usual practices, as stricter sustainability requirements have effectively closed off any further expansion of planted areas. This comes amid decades of structural constraints, including stagnant yields, aging trees, and chronic labour shortages, leaving the industry with little choice but to accelerate technology adoption to sustain long-term growth. He said with Malaysia's Sustainable Palm Oil 2.0, the European Union Deforestation Regulation, there is no room to open new land. Productivity must now come from technology, mechanization and better planting material. This was said by Parviz in a group interview during the International Palm Oil Congress and Exhibition PIPOC 2025. Malaysia's oil palm yields have remained largely flat for nearly 2 decades, compounded by slow replanting and a rising proportion of aging trees. Although crude palm oil CPO output may reach 19.5 million tonnes this year, Parviz said sustaining long-term growth will require fundamental change. He said our trees are now in their 4th generation after more than 100 years of planting. Yield has stagnated and replanting has been slow. With no new land available, increasing productivity is the only way forward. We'll now take a short break, but don't go away. We will return shortly with more corporate news developments. Welcome back to the Midday Roundup. Let's continue with corporate news developments in Malaysia. In a year marked by extreme market swings and the shock of unprecedented US reciprocal tariffs, Malaysia's initial public offering IPO market delivered a strong performance, supported by a steady pipeline of new listings. A total of 60 IPOs in 2025 added 32.96 billion ringgit in market capitalization to the local bourse, marking its strongest showing in 2 decades by market value as the year draws up to a close. Now, while Bursa Malaysia Berhad met its 2025 listing target, total funds raised came in lower at 5.96 billion ringgit, about 20% below the 7.42 billion ringgit raised in 2024, when 55 companies were listed. Now, by comparison, the 2024 IPO cohort added 31.37 billion ringgit in market capitalization, led by large listings such as 99 Speedmart Retail Holdings Berhad, now valued at 31.92 billion ringgit, and Johor Plantations Group Berhad at 4 billion ringgit. Of the 60 listings in 2025, 11 were on main market, 44 on the ACE market, and 5 were on the LEAP market. The last time Bursa Malaysia recorded a higher number of listings was in 2005, with 79 companies, while the all-time peak remains 92 listings in 1996. This marks a sharp contrast with the COVID-19 period, when IPO activity fell to just 19 companies. Since then, listings have staged a steady recovery, more than tripling and culminating in a strong showing this year, despite a challenging global environment. The primary fundraising in 2025 was driven by several large listings, led by Eco Shop Marketing Berhad, which raised 974.2 million ringgit during its main market debut on May 23rd. Other notable main market fundraisings included Paradigm Real Estate Investment Trust with 560 million ringgit, Kuku International Malaysia Berhad with 394.59 million ringgit, and Orkim Berhad, which raised 368 million ringgit. The East market also recorded strong activity, led by Aqua Walk Group Berhad with 228.5 million ringgit, followed by Oriental Kopi Holdings Berhad at 183.96 million ringgit, and Lim Siong Hai Capital Berhad with 168 million ringgit. Rounding out the top fundraisers were Pantech Global Berhad at 178.3 million ringgit, Signature Alliance Group Berhad at 161.2 million ringgit, and HI Mobility Berhad with 158.6 million ringgit. In terms of share price performance, Lim Siong Hai Capital led the pack, with its shares surging 131% since its ACE market debut on March 21st. The stock last closed at 1 ringgit and 92 cent, lifting its market capitalization to 1.61 billion ringgit. Main market listed HI Mobility also recorded strong gains, with its share price more than doubling from its debut closing at 1 ringgit and 33 cents to 2 ringgit and 70 cents, a 103% increase. Meanwhile, Oriental Kopi maintained solid momentum on the ACE market, rising 60% year-to-date from 87.5 cents to 1 ringgit and 40 cents. However, several stocks recorded sharp declines, with market valuations falling by more than 40%. The steepest drop was seen in Kuku International, which slid 50% to 54 cents from 1 ringgit and 8 cents. Similarly, Swift Energy Technology Berhad fell 49.37%, with its share price declining from 39.5 cents to 20 cents. Other notable decliners included MSB Global Group Berhad, down 47%, West River Berhad 45.95%, and Sumisau Jana Group Berhad 44.44%. Up next, we have some business news update. Malaysia's total industry volume, TIV, is projected to decline by 2% year-on-year to 774,000 units in 2026 from 790,000 units in 2025. Now, amid softer consumer sentiment and persistent inflationary pressures, CIMB Securities said the outlook also reflects higher average selling prices for fully imported electric vehicles (EVs), following the expiry of completely built-up EV tax exemptions from January 2026. Additional factors that could push excise duties higher included intensifying competition from Chinese automakers and a potential revision to the open market value (OMV) calculation, said the research house. In a note, it said despite these challenges, we expect demand for national brands such as Proton and Prodwa to remain resilient. This is supported by steady demand from first-time buyers and the mass market segment, as well as the continuation of the RON 95 petrol subsidy under the Budi 95 program. CIMB Securities expect Chinese brands to continue gaining market share in Malaysia, largely by the expense of Japanese marquees driven by aggressive pricing strategies to expand their foothold. The research house said the 6-month delay in revising the OMV calculation provides short-term relief for industry players, particularly automakers with greater exposure to locally assembled vehicles. It said, "We think this will benefit Japanese and European brands such as Toyota, Honda, Mazda, BMW and Mercedes-Benz. It also expects the national segment to command a larger share of battery electric vehicle sales in 2026, following Proton's launch of the E-Mass 5 in November and Prodwa's QVE in December. BEVs accounted for 4.1% of total new vehicle sales in the first 9 months of 2025, up from 2.4% in 2024. The research house maintained a neutral rating on the sector, citing a subdued growth outlook amid intensifying competition. Finally, wrapping up, we have major corporate developments and deals across Malaysia. Petronas Gas Berhad will implement revised tariffs for gas transportation and regasification services under Regulatory Period 3, effective from January 1st, 2026 to 31st December 2028, following government approval. Gas Malaysia Berhad has announced new gas distribution charges across Peninsular Malaysia, where the base average tariff for users of its natural gas distribution system has been set at RM1.88 per GJ per day, effective January 2026. As Negatri Berhad has committed to introducing a living wage policy in the first quarter of 2026, where the first phase will cover approximately 8,000 non-plantation employees and is targeted for completion by December 2026. TRC Synergy Berhad has secured a RM550.8 million contract from SRS Consortium Synergy Berhad for the Penang LRT Mutiara Line project. Last but not least, Nation Gate Holdings Berhad has entered into a sale and purchase agreement to acquire the entire issued and paid up share capital of Valeo Malaysia CDA Synergy Berhad for RM60.9 million in cash. Now that's a wrap for Midday Roundup with me, Aina Jaria, on Kleverstock. Thank you for choosing us investors. Stay tuned for the upcoming live stream programs soon.